Singapore just released Nio explosion to $100. When they first start trading, most new traders have trouble making sense of the markets and figuring out how to put their portfolio in a position where it can thrive. Many people attempt their hand at starting their businesses, only to find that they quickly run into a streak of losses, progressively watching their accounts drop to what it was when they began. Avoid having this occur to you at all costs. Nio Inc., a Chinese manufacturer of electric vehicles, made its debut on the Singapore Exchange without first having to raise any capital. This provides investors with a third market in which they can trade the company's shares, joining New York and Hong Kong. Hello, and welcome back to Stock Market News, where today we will be talking about what is happening in the market right now, all the new updates, and everything that you should know about the stock market. Don't worry, you're in the right place. Without wasting too much time, let's get started. The revelation made by Nio comes at a time when the company is facing the possibility of being delisted in the United States, which has caused a drop in the price of its stock. Since the company was identified in the provisional list of non-compliant companies, the stock has lost more than 1/4 of its market capitalization. This is because the company was not in compliance with the regulations. On Friday, the share price increased throughout the day, going from $16.90 to $17.30 at the close of trading. Nio decided to follow the route of a listing by way of introduction rather than the more conventional route of an initial public offering or IPO, and as a result, it did not raise any capital. The secondary shares traded in Singapore are completely interchangeable with the ones traded on the New York Stock Exchange in the United States. Nio became the first auto company to be listed on 3 exchanges on May 20th, 2022, when it successfully listed its Class A ordinary shares on the main board of the Singapore Exchange Securities Trading Limited, or SGXST, under the stock code NIO for Nio. This also made Nio the first Chinese company to be listed in New York, Hong Kong, and Singapore. Nio has reached an important new benchmark today. Nio's plans for the expansion of its business on a worldwide scale place a significant premium on the company's listing on the SGX. With Singapore's strategic significance, Nio has further cemented its foundation in the global capital markets. In addition, we will make use of Singapore's excellent position as an international financial and technology center to further our own goals. We will further broaden and enhance our global R&D footprint by collaborating with science and research institutions and establishing Nio's R&D Center for AI and AD in Singapore. This will allow us to establish a global R&D presence. William Lee, who founded Nio and serves as its chairman, CEO, and chief executive officer, said, "The Chinese electric vehicle manufacturer is the latest in a long line of companies that are already traded worldwide, but have chosen to list their shares in Asia through a process that is both more expedient and less expensive than an initial public offering. The fact that the corporation can sell its shares in Hong Kong and Singapore offers it some protection against the possibility that it would lose its listing in the United States owing to regulatory problems." After it was revealed that the company had been provisionally identified by the U.S. Securities and Exchange Commission under the Holding Foreign Companies Accountable Act, Nio announced on May 5th that it would work hard to keep its listing status in both the United States and Hong Kong. The statement comes after Nio disclosed that the company had been provisionally identified by the U.S. Securities and Exchange Commission. The company was established in 2014 and has since entered the race for electric vehicles with a product portfolio aimed at consumers from the middle class, as well as customer-centric services and an innovative battery swapping model. Nio, along with its competitors, has had to deal with difficulties such as higher raw material pricing and disruptions in its supply chain as a result of the COVID epidemic. It was forced to briefly halt production in April because its suppliers in Jilin, Shanghai, and Jiangsu were unable to continue production or were forced to postpone shipments due to logistical challenges. The value of Nio's American Depository Receipts, or ADRs, has decreased by 47% so far in 2018, while the value of the company's shares traded in Hong Kong has decreased by 15% since their first day of trading on March 10th. Nio recently completed its listing on the Singapore Stock Exchange, which was a welcome development. Because the company is listed in both New York and Hong Kong, it is the third exchange where investors can trade Nio stock. The shares traded on all three exchanges are identical and, in theory, should trade at the same price. There may be some opportunities for arbitrage between the exchanges. However, this is not something that most retail investors should be concerned about. Today marks a new milestone for Nio, says Nio founder William Lee. The SGX listing is critical to the growth of Nio's global business. Nio has strengthened its position in global capital markets. Singapore is an important Asian capital market hub. In addition to listing on the stock exchange, Nio is establishing a research and development center in the country for autonomous driving and artificial intelligence. Singapore trading reduces the risk of delisting. The Singapore listing potentially removes or at least mitigates one of the overhangs on Nio stock. As geopolitical tensions between Washington and Beijing continue, some major Chinese companies face delisting from U.S. exchanges. The major sticking point is the Securities and Exchange Commission's and Congress's recent push for disclosure regulations. Chinese companies listed on American exchanges are required to open their books for audit by U.S. regulators. This request has been turned down by Beijing, and for a very long time, historically speaking, Washington has just let it slip. It does not appear that this is the case any longer. Because its shares are now marketable, Nio's listing on various exchanges provides some measure of protection against the risk. Even while the majority of financial transactions are still conducted on American exchanges, most modern brokers now make it possible to trade on international markets. This would make it possible to gain access to Nio stock in at least some capacity. New York will continue to serve as Nio's major listing location. The shares that are traded on the Singapore Exchange and the ADSs that are traded on the New York Stock Exchange will be completely interchangeable with one another. The company's shares are also traded on the secondary market in Hong Kong. Nio shares began trading in Singapore at $16.90 per and quickly increased by 20% as the market opened. The electric vehicle manufacturer, which is seen as a competitor to the market leader Tesla Inc., did not go through the typical initial public offering process to generate funds in preparation for the listing. Nio is one of the large number of Chinese companies that are placed on a list compiled by the United States SEC of stocks that are at risk of being delisted due to Beijing's refusal to give auditing access. Regulatory pressure is currently being exerted on Chinese stocks that are traded on U.S. exchanges, according to CNBC's article from Friday, which cited Lee as a source. But we are seeing the regulatory bodies in the two nations are active in the discussion. We feel that by listing on exchanges in 3 different countries, Hong Kong, Singapore, and the United States, we are providing investors with greater opportunities. Nio ended the trading day on Thursday with a gain of 5.2%, trading at $16.70. The lesson to learn from Nio stock. The listing of Nio shares on an alternate exchange, which will make it more accessible to investors, should help to ease the fears of some of those investors. This has the potential to kickstart the momentum of Nio being evaluated based on its value without the discount associated with delisting. Nio stock could potentially stage a comeback from these price levels, even though a bottom has not yet been established. And that's it for today's video. Please keep in mind that this channel is not designed to give financial advice, and we do not encourage you to invest in any firm. This is the method via which instructional content is brought to your door. With that in mind, before you buy anything, we recommend that you conduct an extensive study on the subject. Thank you for watching the video. Please like and subscribe to the channel for the most recent updates, and until then, we'll see you soon.